Hi, Steve Rhodes with TFNN, and we're going to take a look at our first example utilizing the relative strength indicator. That's the bottom portion of the chart here. We're taking a look at the Dow Jones Industrial Index going back to 1928. Primarily what I want to show you is how to utilize these tools so that they can keep you in the market as well as get you out, or maybe take a look at making a short position trade for yourself. And I want to show you that these work really in all time frames, all markets, all instruments. And so we're going to come back here to the 1928 time frame. The crosshairs of my cursor takes us back to December 10th, 1928. Now, the best time to take a look at purchasing an index or an equity or currency is when the relative strength indicator is down towards its lows. Ideally, you'd want to be taking a look at a trade when it's down towards the bottom portion. If you look in the upper right-hand side of my screen, as I hover over a bar, it gives you a read, and you can see here on December 10th, 1928, the reading is 38.66. But you want to be buying when it's coming from the bottoms. You want to use candlesticks as your confirmation to go ahead and enter a trade here. But what I want to really focus on here right now is up at the highs. Now, candlestick charting is the tool that will tell you whether or not to go ahead and enter or exit a trade. So I'm going to come back here into this time frame right here, which is in July in 1929, when you can see the relative strength indicator here getting above the 70 level. When it gets near the 70 level, you want to be keeping close attention to the candlesticks that are being formed, and you want to be looking for reversal candlesticks. Now I'm going to go ahead and widen this shot out here, and you can see that when price is moving up, even though it got beyond this area here, much like our markets are today, you never received a reversal candle. Now, if you're not familiar with reversal candles out there, I do have a workshop, a 6-hour workshop that you can take advantage of. It's listed in the newsletter or the special report that you're taking a look at. But you never received reversal candles. And when things get overbought, this is referred to as being overbought, there are two ways to work that off, either by moving down, with a market moving down, or moving sideways. Much like when you go, maybe Thanksgiving meal, you overeat. Here it's overeaten or overbought. And the ways that you work that off are to perhaps sit on a sofa and watch a football game and just let it travel sideways. The market here traveled sideways, never gave us a bearish candle signal. So there was no reason, in this case here, to actually exit your trade, but you wanted to be paying attention to what the bulls and bears were saying on a daily basis, because you expect the market either to move sideways or to pull back. As far as where a market would pull back to, if it was pulling back in here, your first logical area is going to be this swing point. And a swing point is nothing more than a major change in direction in the marketplace. So the market moves up a little bit. You do have this little gap down here. For those of you out there that are familiar with candlestick parting or Western signals, this was an island reversal. An island reversal is a bottoming pattern. An island reversal is something to be paying attention to when the market closes back below it, because this should be a very strong bullish area. Market goes ahead, moves higher, gets up here into the relative strength above the 70 level, meaning overbought. You did get a bearish signal right here in these three candles right in here. This was your bearish signal, and this was the time to go ahead and exit a trade. Take your profits off or create a tight stop out there. Now, the market moves down into this area here where it gets oversold. So the top is overbought, the bottom is oversold, and then it gaps up. Now that was a bullish sign by gapping up out here. I teach folks how to blend candles together. That's another very unique aspect of my education and training that's available to you if you were interested in taking that candlestick charting workshop. But this was an indication that you could certainly go ahead and take a long trade out here. And for those that did, they would have entered about right here, and you would have been exiting this trade once you got below this candlestick right here, once you got below this low. And in fact, you also received right up here, this three sets of candles. You also received your bearish signal out here. So it is said to have been cautious with this gap up. Start to be cautious, not necessarily to exit the trade, but once you close below this gap, it said it would be coming down into this candle here, and you can see here the market went ahead and gapped down. So you might have had a little bit of a small loss out here, but what you would have done was you would have had the signal to have been out of the market. This is before the crash of 1929, and you're waiting for confirmation with a reversal candle or a set of candles. Market goes ahead, moves down into the crash. You never received a bullish confirmation. I do show also a part of my workshop that I'm going to be doing a free 60-minute workshop that teaches you how to use the RSI, be able to look for different divergent patterns. I'm not going to go ahead and spend the time right now and show that to you, but there is a 60-minute workshop that you can sign up for that. But utilizing the RSI as the market came and made a lower low back in November of 1929, you got your reversal signals. There was a divergent pattern out here that suggests that you come back in the market. You can see the market went ahead and it pulled up. So you want to be able to utilize these sets of indicators because you want to buy weakness, you want to sell into strength. And so here after the crash, nobody perhaps wanted to, of course I wasn't alive back then, and nobody perhaps wanted to buy into the market, yet you received all the signals necessary to go ahead and to have kept you out of the market and to have come back in. So I hope you've enjoyed this video. There's a couple of more here for you to be able to take advantage of and learn from how to utilize the RSI and candlestick charting. Again, Steve Rhodes, Steve at tfnn.com is a way to reach me. Have a great day. Bye-bye now.